All right, everything looking good. We are live. Let's go ahead and get this party started. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is 8 p.m. Eastern Standard Time on Wednesday, 6/22/2022. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, so leading up to the last couple of days, this recent bounce, obviously we've been talking about how quite a few of these assets/asset classes have been essentially finding some key support levels, and how we're basically expecting at least a short-term relief rally. Still very much a bear market rally, a counter trend trade. Obviously took advantage of some of those positions in crypto and stock market as well. I'm going to go ahead and take a look at what's really going on here. See, is this trend looking like we're going to get, or is this bounce looking like we're going to get a little continuation, or are we basically just getting a little dead cat bounce before continuation back down to the downside? So we'll go ahead and start with our regulars. Going to try to keep this one relatively short. Been running long lately, but there's been a lot going on. And I understand that not a lot of you guys have the time to allocate to these extremely long streams. So I'm going to try to like reconfigure it, start doing a couple more static videos and then shorter streams. So maybe I can hit you guys with like daily content or something like that. Instead of 3 streams that go 2 to 3 hours a piece, try to keep the streams to an hour, maybe 2, and then do a couple of static videos in between, where basically we can go through, and initially I'm going to start off by showing how I draw a chart from scratch. And then you can kind of follow along and just do some various different content like that, static video wise, as I think that'll be a little more appealing and useful to people that don't have as much time to allocate to these regular updates. As I know a lot of people are more just trend following investors, more so than like scalpers, traders, etc. So I think stuff that has a little more like longevity to it over a specific stream would be ideal for the community. So that being said, let's go ahead and take a look at what's going on here. So we have our TNX chart daily right here. And essentially what we're looking at is what we had talked about in advance. So we basically have a clear high right here. We have what's looking like a lower high here. We now have, 4 or so histograms in a row to the downside. We're losing the slope line. And it looks very clear with this high and then a higher high that we're actually putting in some form of bearish divergence right here. So we're starting to look a little tired. Obviously losing the 21 will be crucial. We have the previous high as support right here. We have the 21 moving average as support right here. If we fall from that, we would expect the previous low to act as support. If we fail to hold that, we're looking at the 200 exponential and simple moving average a little bit lower. Now, what we're looking at now, though, we have officially closed above that previous high from 2018. And at this point in time, it's no longer an internal retracement. We have put in officially a higher high. Doesn't mean that anything that happens after this changes it. The fact of the matter is we have confirmed a technical breakout. Now, if this breaks down and just starts going lower, it's possible we could get essentially a fail breakout or fake out or something to that degree. But that's not really what I'm looking at right now. And honestly, if we came all the way back down to like the 786, got a retest around like that 2.12 level, this chart would still look extremely bullish, as it would basically just be a breakout, move higher, a retest, and then we would expect continuation. So, and then the longer time frames, it looks like we still have a ways to go on this, as the trend is only really getting started. So on to TLT. So now we're seeing that relief rally in TLT, obviously corresponding with the inverse relationship on the bonds. We obviously had talked about this triple bullish divergence. We saw 1, 2, 3 lows. We saw 1, 2, 3 higher lows, and obviously getting that move back up. The key level that we need to watch on this is it needs to get at least above 117. Putting it back above 117 will reclaim our long-term ascending support bottom of the channel right here. And then if we can get a slightly higher than that, somewhere about like 120 or so, we actually reclaim the descending channel as well. It would look like basically a spring or a breakdown that actually reclaims that support level, and then we could get moved to the upside. Do I think that's going to happen? No, not really. I don't see rates coming down anytime in the near future. I really don't, because honestly, at this point in time, if we just go back to rates real quick, on the TNX, the 10-year, we're at like 3.1. If you look at what the Fed's projection for the Fed funds rate by the end of the year, the average like projection is over like 3.25, something like that. So if we're currently at, was it 1.6? 1.6 right now, roughly. So if we're at 1.6, we could expect roughly another 1.6 raise in interest rates. We know the first hike we got was 25 basis points or 0.25%. The second was 50 basis points, 0.5%. And then the most recent one was 75 basis points. So now we have basically in our last 3 meetings, we have hiked a combined 1.5% from essentially zero. So that means that we should expect another 1.5% by the end of the year. So what is that going to look like? We don't know. If it's 3 rate hikes by the end of the year and each one is 0.5, that's reasonable, puts us right at the median target. If it's, another 75 basis point and then a 50 and then they slow it down by the end of the year and it's only 25, that's viable. It's possible we get more, it's possible we get less. We don't really know. But what we do know is right now, we're basically on target to have a 3+% Fed funds rate by the end of the year. So it's not going to make sense. Obviously, if the Fed funds rate goes higher than 3% or up to 3%, obviously 10-year Treasury is going to be right around 3% as well, if not higher. So in all reality, this just already moved up in advance. All the Treasury yield basically has sort of like front run the Fed based on their targets. Essentially it's quote unquote priced in. So if nothing changes and we just go about our business by the end of the year and the Fed's projection is right, there's no reason to think that the rates would come down. So there's no reason to think that we're going to get some massive rally in the bond market. So I just don't see it as a viable situation. Unless something breaks in the market, I don't see anything that changes. Next, we have the VIX. So the VIX has been operating inside of this triangle in the ascending channel after the breakdown from the descending channel right now. And exactly as we've been talking about, this was a very, very strong resistance. We have the top of our triangle right here. We have the heart line of the channel right here. And obviously, that has acted as resistance. And we see a short-term rejection as we see a move in the markets. So what's going to happen from here? We don't know. What we do expect to happen is this to just continue oscillating inside the triangle until it breaks. We're only going to get one confirmed breakout. It could happen, anytime. It could happen literally tomorrow, or it could go until, the end of 2022. Either way, it would just be continuing to operate inside of our pattern, which is what we expect until we get that final single break. We get confirmation with a retest, and then we get continuation. Whether it's to the upside or to the downside, doesn't matter to us. We're just going to play that accordingly. What we do know is when we run into this resistance at the top, the VIX starts to sell off, the volatility goes down, and the markets rally. And we know when we get to the bottom right here that the VIX starts to pump back up and volatility picks back up, and obviously markets go back down. So we're halfway there now. So the move that we had these last couple of days has essentially used up half of its energy on the VIX. So if we have the equivalence another couple of days, maybe we rally into the end of the week, that puts us right back down here at support again. And again, we would expect to bounce all the way back up to the top of the range. So half of our rally is already done. So what could we really expect out of this rally? Does it still have some legs to it? I would say no. I would say there's not much left. I mean, there's a couple percent maybe, but not enough that it's just like, oh, all of a sudden we want to buy into this. We see this starting to roll over. We got the hard buy already. It moved up to the top of the range, starting to roll over. So, this could continue back to the downside, push all the way back down to support. And then at that point in time, we can pay back attention to what's taking place. But based on this, based on what we see from the VIX, unless we see a breakdown out of this range on this next retest to the downside, this rally probably doesn't have any legs to it. It has already used up an extremely large amount, essentially 50% of the range that it has to trade within. And we've barely gotten any move back to the upside. So in my opinion, I don't see anything here that tells me this rally is going to have any kind of legs to it. So next, so we had exactly what we were expecting play out on oil and just energy in general. So obviously another lucky prediction from the Magic 8 Ball. U.S. oil, WTI crude, whatever you want to look at, has essentially had that initial breakout, found some support at that yellow support line, broke down from it. The 821 have crossed the downside. We came down, and now we have actually fallen back below this ascending support line. And this is the one, this is this ascending broadening wedge. We have literally been trading, this entire time since basically, mid-year last year, 2021. So this has played out very nicely. We've seen quite a few times of bearish and bullish divergence. It's traded very, very technically. And now here we are. We have lost that key support line. Now we did lose it right here and we rallied back up, but then we put in a lower high. So that was probably our chance to save it. Now here we are in this sideways channel, this horizontal channel at support. Doesn't look good, but look, oh, we're about to hit our target. Hello. So obviously our target was, roughly in between $100 and slightly lower for a retest of a 200 exponential and simple. At that point in time, we're going to pay attention to what the price action looks like and potentially reload back up on our energy positions as we are macro bullish. Now, if we get down to this area, we start to see weakness. There's definitely a possibility we break down from the 200 exponential and simple, at which point in time we would pay attention to our previous top from right here, which also corresponds with our macro fib level as well. So that being said, paying attention to this potential 786 as support, depending how long it takes to get there. Maybe we come down here, we bounce to 200 exponential and simple, we move back up, another lower high, come back down here, finally get a break of the range. Then we get a retest of the 786, which at the time, depending when we get there, now all of a sudden we could start looking for some confluence. And what do we see? We basically see this green support right here. We broke out. We failed to hold that breakout. We're coming back down. If we fail to hold the 200 exponential and simple, maybe we come back down and retest the bottom of the range as low as essentially low 70s. So that being said, don't pay attention to this right here. That was just part of the move, but the green one is what we're paying attention to. God, I hate this oil chart. But that being said, basically getting the exact move we set. So this has been the trade of the year. It's extremely crowded. Everybody is still saying rushing to it. Oil, energy, that's where it's at. Everybody pile in. And now what's happening? They're getting their faces dumped on. As over just the last couple days, I mean, if you were late to the party, you got wrecked. Sorry, down 15% here. We saw from the initial peak right here, the initial pullback, and then support was at like 26% down. So, if you were late to the party right here, you were literally getting wrecked over and over again as we're consistently putting in, lower highs. So, the energy trade, I'm not saying it's done, but for right now, this trade is worn out. I mean, it is, everybody's in it. There's nobody left to buy. So, what do you expect to happen? Well, if everybody's already in it, the trade's done. And now here, once again, we see the weakness coming in. We still have the slope line. We got this buy signal at the top of the range, but now look, it's rolling over, false signal. That's why we do not like a buy signal, a stochastic cross, a hard buy above the 50% line, because the probability of it playing out is extremely, extremely low in comparison to if we get one from below the neutral range. So that being said, basically just seeing exactly what we expected from oil in general and, energy as a whole. So going to keep playing the right side of this one, looking to reload back up on our positions when we get down to some of these desirable levels. Is that going to be in the next week? Do we go much lower and it's a couple months from now? We don't know. We got to play it by ear. So looking at the Dow Jones, obviously Dow Jones came down to our target. We bounced the bottom of our descending broadening wedge perfectly. We also bounced this crazy little support right here that counts for almost nothing. And then obviously we came down essentially to, this is our wait, this should be yellow. Sorry about that. I mean, it can be whatever color you want, but I just keep them yellow just so it looks the same on every chart. That was our pre-2020 Rona dump right here. We retested that level. So we basically gave back everything. We pumped $10 trillion into the economy, into the system. And where are we at right now? Right back where we started. So is this a healthy economy? Is this good? Is this just a retest, a back test of the breakout level? Or did we just get high for a little bit and now we're coming back down? And if we don't get another hit off the, monetary / fiscal, stimulus crack pipe, what's the economy going to look like in the future? Probably going to look like a crackhead that's jonesing. And it's not going to be good, I'll tell you that much. So that being said, we did break down from the 236. There's potential that we still have enough juice in the tank to come back up and get that retest. That's what I'm looking for short term. This thing has been underperforming. This was supposed to be our bounce to the upside, underperform. So is it possible that this one underperforms as well? It is. I think it's more likely than not we get above the 236, maybe test something else here. But there's not a lot of legs on this rally as far as I'm concerned. And once we do start to roll over, if that is so the case, our 382 will be our next target to the downside because we basically already hit that pre-Rona dump. So I'm not seeing anything right now that's making me excited or juicy or getting hyped up about the Dow Jones saying, oh, we probably bottom. And when we look at the longer term time frames, this is exactly what we're talking about, the levels of confluence. 200 exponential on the weekly, 200 simple on the weekly, pre-Rona high right here. We would expect a dead cat bounce or some sort of bounce off of this level because we have so many things lining up in the same spot. We had Bitcoin 20K, we had the 382 on Bitcoin, we had like macro, we have the pre-Rona dump right here. Bitcoin, it was the previous 20,000 high. We see all these things at key support levels. So again, that's why we're expecting this bounce. Does a bounce have to have legs on it? No, but we're expecting it. That tells us, what is this realistically? Is this a bunch of buying pressure come in? Is this people bullish all of a sudden on the markets? No, we know what this is. This is all the people that have been short closing their positions, taking profits. And then it looks like a bounce, but all it really is, all the buying pressure that we're seeing right now, it's just closing out shorts. It's just taking profits, in my opinion. Obviously, none of this is financial advice. I'm not your financial advisor. Markets are extremely volatile. Please do your own research and trade responsibly. We see hard sell signal on the monthly. We see the trend is accelerating to the downside. We're very close to the 821 crossing. We know what happens when we get that cross. It's a bloody waterfall. Now, is that the bottom right afterwards? We don't know. Do we come all the way down to 200 exponential or 200 simple? We don't know. But we know, but in order to get that deep retrace, that big serious correction, in order to have that, we know the 821 has to cross to the downside. So we know one of two things is going to happen. We're either going to stay below 32,500 and we're going to get that cross to the downside, and then we'll see how nasty this gets, or we rally all the way back up to 32,750. We reclaim the 821 and then we start cruising back to the upside. So I don't know which one's going to happen. You don't know which one's going to happen. But what the chart is telling us right now is it looks like it's about to get more nasty, because we're seeing the strength of the trend accelerate to the downside. This is the nastiest candle we've had yet since the top right here. So we still have, 8 days left on this candle. But, if we don't get that massive rally back up to basically 33K, I mean, we can just assume that this is going to cross to the downside by the time this next monthly prints. So that being said, am I bullish? Do I think this rally has any legs to it? I don't. Maybe a day or two, a couple percent, but nothing worth note. SPY, again, destroyed the 236, just completely dropped down out of that. Again, finding support at the bottom of our ascending broadening wedge. We did leave some gaps behind right here. Maybe we come back up, retest the 236. Maybe we come back up to the heart line in green, get that retest. But we know, again, high, low, lower high, lower low, lower high, arguably, possibly just part of the same move. Eventually, maybe we come back up. We get crazy. We come back up to 430, retest the 200 exponential and simple. Another lower high, roll over. I mean, I doubt it. We've been underperforming, but that's what I would be looking for a potential strength to the upside. And then here again, let's look at this level of confluence right here. Perfect bounce off the 200 exponential. What do we know about the 200 exponential? We know Wall Street really doesn't give a shit about it. We know it cares a little bit, but we know really Wall Street looks at the 200 simple. So I can't see maybe one time right here, arguably, where we come down and we touch only the 200 exponential and we don't touch the 200 simple. Previous times, obviously, we violated those areas. Here we touched both. Here we blew through both of them. So the likelihood that we just bounce the 200 exponential and then just rip back to the upside and that's it, very, very unlikely in my opinion. Again, this looks to me like taking profits, because when we set profits for this trade, when this 821 fails to cross back to the upside on the weekly right here, we set target to the downside. What's our first target to the downside? Either fibs or moving averages. So obviously in this case, our take profit is the moving average. So what is this really? Again, just people taking profits. I don't see any signs that this is some sort of reversal or, anything like that. This is not the time to be dollar cost averaging into a downtrend that could literally last for years, in my opinion. Monthly chart, 821 about to cross the downside. If we do not rally back up above 415 or so, we're going to get the cross to the downside. We have not had the cross to the downside since 2008. We did not even get it during the Rona dump right here. So if we see that cross take place to the downside, that's going to be the nastiest cross we've literally had, the nastiest monthly price action we've had since 2008. And the time before that, well, we already know, 2000. So we're literally at the point now, and a lot of stuff has happened since 2008. There was, difficulties in 2014, 2015. We had difficulties in 2018, 2020 area right here. And yet, never had the 821 cross the downside. The market was always strong enough to maintain. So what is going on right now? Well, we're very, very close to violating that. And now all of a sudden we stop looking at these areas right here as a possibility of a similarity. And we start really paying attention to, okay, we're looking at a 2008 or 2000 level, crisis or market sell-off or whatever. We're also at extremely high levels on the TJD, TDMACD. We have a hard sell signal, left the bullish control zone on the Jewel Thief. And again, we have lost the slope line. The slope is still blue right here, but we did not find support. We have all red histograms for month after month after month. There's no doubt in anyone's mind that has a brain whatsoever that we are 100% in a bear market. Obviously, I told you multiple times that we would be down 20% from the top. We would already be calling bear market along the way. And then at 20% down, the rest of the market will say, well, I think we're in a bear market now. I mean, technically. Oh. But, that's what we expect, is everybody else to be on the wrong side of the trade. Same thing that happened with energy. Same thing that's happened over and over again. with all of these plays. By the time we're taking profits, everybody else is FOMOing in. And you know what? We'll happily take their money. That's the cost of doing business in the markets if you don't know what the hell you're doing. So IXIC, NASDAQ next, obviously came down to some key support levels. We see we had basically bounced that same level once again in between the 236 and the 38. I'm sorry, between the 382 and the 0.5. If we go out to the weekly, again, we see a bounce off the 200 exponential, 200 simple right here, our key area. We'll see what happens out of this, but now it's worth paying attention to that along the way, all red this whole entire time, all bullish with only just tiny little signs of the bears ever taking control. And now here we are, the biggest, nastiest bearish control zone since 2008, 2009. So literally the NASDAQ has not been this bearish based on, you know, the level on the stochastic since 2009. So we've already reached that level on the weekly. So does this look like a characteristic move and we're just going to bounce now and just ricochet back to the upside? I don't think so. I honestly don't think so. Even in the 2020 sell-off right here from that Rona high, you know, we never even entered into the bearish control zone. You know, we had this V bottom and the Fed bailed us out before that happened. The time before that was 2018, and even that was just a little sliver of green right here. We are in the green. It's nasty. So what do I expect? Continuation in the downside, possibly retest back up to the 382, but I do not see anything in these charts that are bullish right now. When we look at that monthly too, we see that cross is inevitable at this point in time. If the NASDAQ does not rally back above 13,000 in the next 8 days, you know, we can say goodbye to this trend. And again, we're seeing the last time this has happened, 2008. So again, there's a reason that we keep comparing the sell-off to 2000 and 2008 and not these other little bullshit sell-offs, these little, you know, fake bear markets that get bailed out by the Fed. The time is, there was never inflation during this period, and the Fed had plenty of bullets. We had fiscal, we had monetary stimulus, you know, potentially to get us out of trouble here. We have nothing now. The Fed funds rate is still at 1.6%. They have no ammo left. If they try to walk out there and shoot off their shotgun right now, it's going to be one of those little flags, okay? Do you see in the cartoons when they shoot their gun and then the flag pokes out and it says something on it? And you know what it's going to say? It's going to say something like failed or, you know, empty or something to that effect because they don't have anything in there. There's no shots left. So until we get back to where we can get back to rates at a decent level in order for the Fed to lay off and cut and, you know, start to stimulate the economy, until we get, you know, basically government that's actually able to accomplish anything, which is probably not going to happen anytime soon going into the midterms this year, we can assume that we're not going to have that double-barreled approach. That's a fact because we don't have fiscal and we don't have monetary. So we're going to be SOL, and that means probably a retest of the 200 exponential, possibly 200 simple. And obviously this already looks nasty as, you know, the cross looks inevitable. Next, we have the Russell. Again, just taking a look at the Russell here and seeing how this price action has developed. 821 cross has already happened. We are already retesting our 2018 levels because we put in a lower high in 2020. So at this point in time, it looks inevitable. We're coming down. All the momentum is bearish, all in favor of the bears. The bears are in complete control. Absolutely nothing bullish in these markets, in my opinion, right now. So XLI at that pre-pandemic levels right here looks very, very weak, obviously. XLP hanging in there for now. Consumer staples obviously having some difficulties at some of these lower levels, but just continually putting in lower highs and lower lows. Does not look good. Doesn't look good. You know, we're looking at that area where we could bounce back up, but all of our was support is now going to be acting as resistance. XLF financial sector, again, very weak, down at the bottom of our descending broadening wedge, also at our pre-pandemic levels. We would expect some form of support at these levels, but it doesn't look like we're going to be picking up momentum going back to the upside anytime soon. XLRE, real estate, obviously we came down, we hit our target, beautiful trade for a nice 20% arguably move right here. And then of course, obviously we're going to take profits at the 382. That's our target. We get to the target. We take some profits off the table. We expect some kind of bounce right here. Is this buying pressure coming in? Is this a bullish trend resuming? No, it's not. It's people taking profits just like us. XLV is next. So now we've got the healthcare retesting our breakdown level. Obviously, that was what we expected. We break down from a key support level. We retest it. We retest what was support as resistance. And then if it continues to act as resistance, we roll back over. And then we see that continuation to the downside. So this is what we call a support resistance flip or an SR flip. We have lost support. We retested it as resistance. It acted as resistance, and then we roll over, go lower. Next big target down here will be the 382, which is just going to be, I mean, wreck city for healthcare. As everybody ran to this as a safety play, but there is no safety in these markets. XLB material sector, obviously down at the 236, lost some key levels of support, basically hit this area and did nothing. So we're seeing extreme weakness. We didn't get any kind of move back to the upside, not what you want to see if you're bullish in these markets. XLY is next. Consumer discretionary came back down to the pre-Rona dump levels, hit our target to the downside at the 0.5, and again, just consolidating, putting in consistently lower lows. Not good. I'm not seeing anything from consumer discretionary that's telling us all of a sudden we're going to see some kind of reversal. XLU utilities, we broke down to the bottom of our channel now. We have broke through the bottom of that green ascending channel. We're retesting what was support or should have acted as support as resistance now. If we do not reclaim this level, if we cannot get back above this level right here, we then expect the measure move to play out. Initial move down to the 382, follow through to the 0.5. You know, we're at low levels now, so maybe we do consolidate around here. Maybe we do try to push back up to the 236, but what's it really going to look like? We're just confirming into a bear market right now. It's probably going to move up here, start looking like a bearish reset, and then roll back over. XLC communication all the way down at the 618, very, very nasty, violated our pre-pandemic levels. So if you were a buyer before anything went sour back in 2020, next thing you know, you're already lower than those prices. You're a loser if you bet on communication. Not a surprise, as we see the main players in the communication space are trash bag companies such as, you know, Meta and whatnot. So obviously garbage space. I wouldn't expect any more from it. XLK technology obviously down at the 382, not looking good. Obviously had a nice little move up here, came back down, retest, lost our key support levels at the 200 exponential and simple, rolling over, confirming into a bear market. Consistently lower lows. All we're doing is just bouncing some key fib levels, some key support. I do expect price action to go much, much lower. We are seeing some bullish divergence developing on the chart right here, but we know what that means. We're in a bear trend now, confirmed. Bullish divergence is probably going to leave us to an underperforming move back to the upside, and then continuation of the predominant trend to the downside. XLE is next. Energy, obviously we called the top on this very, very beautifully. Literally came all the way back up, touched. Now it really looks like this is what's playing out, is our 5-wave structure right here. The 5th wave is completing. So the initial target would be the 236 we already hit. The next target would be the 382 in purple. That's going to line up with our daily 200 exponential and simple. We're almost there. Obviously it is going quite nice. And we do expect that basically to get hit at some point in time in the near future. But the truth is with this, it's starting to look like a blow off top, especially on longer time frames, as we basically went parabolic. But we knew this was going to happen because this is what happens. People crowd into the trade, and we've been talking about it for weeks. At this point in time, we expect eventually a retest of a 200 exponential and simple. The reversion to the mean, the final bearish trade before we find support and then see massive continuation to the upside. We're about to leave the bullish control zone. We have already gotten the hard sell signal. We put in some slight divergence on the weekly time frame right here for the stochastics. And now we're seeing that play out. If we do get the 821 cross back to the downside, we would expect consolidation and a move back down to retest these levels. Somewhere around 5860, somewhere around there. Do we get that low? I don't know, but it sure looks like we're right on this one. So, and then we look at the size of this big nasty candle right here, a massive bearish engulfing candle, less than, 8 days left on this. And again, what is that really going to do? Is that a bearish move? No, it's just a retest of a 200 simple or 200 exponential moving average. Again, somewhere between high 50s to high 60s. It's broad right now, but that's what we're expecting. We see now the stochastics are rolling over. We're still in the bullish control zone. We're very close to getting across. It's even possible we get another push back up, but eventually we do expect this to fail and come on down. And if this bearish candle right here prints, I fully expect this to come back down and retest these key areas. So if you are late to the trade on energy, looks like there's going to be some nice buying opportunities in the near future. The key is to be patient and trust the technicals. XTN transportation looking like absolute trash. Retest of the macro 236 and of the internal 382 of our recent move back up right here. So we're starting to hit key levels. Obviously we see the confluence right here. We have basically come down to that key level. The next question is, are we going to get a little bounce back up? Are we going to come back up, retest the 236 in green, or are we just going to continue to roll over? Depends on what the market decides to do. We're already about ready for another just bearish reset. where we basically just kind of go sideways here while we let these daily indicator oscillators move back to the upside before we see continuation. Next, we have XSD Semiconductor ETF. So we have technically lost the support level and then we reclaimed it. Not surprising. I would not be surprised at all to see this come back up and get a retest of 236 and give us a weak right shoulder. Also a retest of a 200 exponential and simple, as we are basically just having that reversion of the mean retest. What was support, the 200 exponential and simple, then acts as resistance. We come back down to the same level we're at now. Maybe a break all the way to the 0.5. So much lower targets in the near future. We do have some bullish divergence. What's it going to look like? I mean, probably a bounce back up to retest the 200 exponential and simple, and then further continuation to the downside. That's what I'm expecting at this point in time. So next we have the US 210 spread. We see basically the 2 years up here at 3.03, the 10 years at 3.13. They're basically at the same level again. We don't really care about the cross anymore. Once a cross happens, once we hit this key resistance line right here, it doesn't matter. What we're looking for is, when does this roll over? Does it roll over before the end of the year and all of a sudden the Fed revises their targets and, flips the script and goes into quantitative tightening, or quantitative easing instead? No, I don't think it's going to happen. We're literally in the first month of their letting the balance sheet roll off. So we still have 2 more months of them picking up the pace. We're doing 33% of the predicted or projected balance sheet runoff right now. So at the end of our second month, we're at 66%. And at the end of the third month, where we meet the 100% goal, and then that's expected to continue for literally years into the future. So we were talking about this in the group, and we said, what's it going to take for the Fed to flip the script and all of a sudden change? Something bad has to break. I mean, like full on break. The debt markets have to literally stop functioning for them to ease. That's the only way, in my opinion. We're only getting started right now. Every other time on this chart where the Fed reversed, we didn't have inflation. Now we have nasty inflation. We're seeing record highs in the United States and Europe, all around the world. So that being said, is all of a sudden the Fed just going to flip the script and they're just going to go back to easing and just essentially like propel the inflation to the upside by just throwing rocket fuel on the fire of inflation? No, I don't think so. I do not think so. So the likelihood of that happening, in my opinion, right now is less than 1% without some crazy black swan event or something breaking in the markets. I just do not see it happening. The Fed is very, very clear that their intention is to crash the housing market, crash the stock market, and essentially we went through this whole long period of wealth creation for the last 40 years, and the Fed is saying right now, hey, it's time for wealth destruction. So if you're new to the game, get ready because it's about to get shitty. And if you've been in the game for a long time, well, get ready because it's about to get shitty. And that's as real as it gets. Jerome Powell is literally telling us this over and over again. So we're at the edge of the cliff. We're getting ready to jump off. And already everybody's saying, oh, we're not. No, we're going to deploy our parachute any second now. We haven't even jumped off the fucking cliff yet. And everybody's already saying we're going to deploy the parachute. Yeah, right. It's not going to happen. It is not going to happen without some crazy, insane event. If it's World War III or something like that, sure, maybe. Black swan event in the debt markets and everything starts imploding, sure, maybe. I just don't see it happening at this point in time. But, again, that's using like reason and intelligence. I mean, we can fantasize all we want because people don't like how this is hurting their portfolio or, the wealth that the Fed has artificially created over the last 40 years. But it doesn't matter what you like. It matters, what reality is and what the market's like. All right, so let's rip on through here. Oh, excellent. Okay, 30 minutes. That was beautiful. So we made it through all the sectors and the main indices in 30. That's perfect. That's what we want to be. So DXY is next. Obviously seeing a little bit of cool down on DXY. Nothing alarming at this point in time. What we expected, considering that we had, essentially printed bearish divergence on the daily. We have a high right here. We have a higher high. We have a high here. We have a lower high. High here. We have a lower high. We expect a pullback and continuation eventually. We don't know how deep the pullback's going to be. Does it go here sideways and then shoot to the upside? Do we come all the way back down to like that 100 level? Doesn't matter right now. Obviously, the trend is strengthening to the upside on the daily, the weekly, and the monthly timeframes. Daily looks like it wants to have a little cooling, but overall, DXY is still extremely strong on longer timeframes. So Tesla, obviously you have that Tesla trade setup. So the entry back here at 658, we have a nice little pop up. It looks like we're at least getting temporarily rejected at the 721 level. Obviously 35% move if we got all the way back up to 200 exponential and simple. Is it going to happen? Is it going to underperform? I honestly don't know at this point in time. Tesla has been strong for a while, but arguably, Elon could say something stupid and everything could go wrong. They're laying off people. He's talking about the problems with the economy and, what's to come. We have all this stuff going on with SpaceX and, Elon pulling out his junk and flashing stewardesses and sexually harassing people and stuff. I mean, the guy's a billionaire. What do you expect? Obviously, they don't, respect the laws the same way normal people do, or just society in general. No surprise there. A billionaire oligarch thinks he can get away with whatever. Sure. I mean, who cares? He can just pay people off. So regardless, of what you think of Elon or what's going on right now, there's definitely a couple issues. And then on top of that, we have the whole situation with Twitter going on as well. So who knows? I mean, is this all going to cause blowback? We really don't know at this point in time. What we do know is Tesla's in a bear market. So while it's possible we get the retest back up to 200 exponential or simple, we're not going to be ambitious on this, as essentially, Tesla has been in a bull market since 2019 at $50.45, adjusted after splits and everything. And now here we are at $708, confirming into a bear market. Is it unrealistic to think now that we get a macro retrace of, that long move, or even possibly the March 2020 low, if not the macro? I would say yes. I mean, realistically, right now, we bounce that 236 in yellow right here. So we're clearly seeing a reaction off of that 236. So it seems reasonable. Eventually, we come down to the 382. Maybe we get a bullish retrace from there. But it seems reasonable that we end up at 417 at some point in time. Now, is it possible? We just come down to the macro 236 at 540. We bounce from there. Definitely is a possibility. Obviously, we have trade setups accordingly. But right now, there's a lot of stuff pointing to further downside for Tesla, as it's basically lagging the markets. Everything else is just dumping down. Tesla's still holding on for now. So it either holds on so long that the markets decide to rally and it makes it through this, or eventually it lets go. And when it lets go, it gets nasty because people are piling in to the ones that are holding up the best right now. The same as we saw with like Microsoft, Apple, all those, Nvidia, that are now struggling, and they were previously the leaders, the strong ones. ARKK completely melting down right here. We did make it to the macro 618 in white, and that is literally from the beginning of time, the lowest low ever back in 2016. This is the whole chart ever of ARKK, and the truth is, Cathie Wood has managed to wipe out the majority of value that was ever in this, let alone any value that was ever created. At this point in time, if you take the total outflows and you look at where they came in at, we saw literally tens of billions of dollars coming in up in this range. And before that, the fund was much smaller. So if it was in the billions on the way up, the couple billions, the 2, the 5, the 10, and then here we got up to like $40+ billion. If you look at what it's at right now, she has literally managed to destroy somewhere between 20 and $30 billion of wealth through her lack of ability to, achieve gains, obviously. So, what's her strategy? Lose everybody's money and take a cut, in my opinion. Now, is that intentional, or is she just, a garbage investor? I would say just a garbage investor. I don't think there's any, malicious intent or anything. But I know if I was this bad at my job and I had lost, $30 billion or so, I would probably like maybe adjust slightly. But instead, we just see here consistently, coming out and pitching her same message again about how it's the future and it's innovation and you just don't understand it. Obviously, she's a dumb fuck because she lost $30 billion. Unless you also have lost $30 billion, I don't think that you're less intelligent than she is. You're probably more intelligent or a better trader. So maybe you just didn't have 30 billion in capital and, you suck also. But I would say probably she's the worst investor, at least in the last like 10 or so years, losing that much shareholder value. So, or realistically, like not shareholder value technically, but, through her ETF. So is Cathie Wood trash? And do I expect her to continue being a trash investor into the future? Yes. Do I eventually think that she's probably right about some of these trends? I do. But at this point in time, she has lost so much value, that if you're basically in this fund at down 74%, in order to get back to even again, you only have 25% of your assets left. So in order to get back to even again, 100x or a double only takes you back to 50. It only takes you back up to the $80 range. So you have to basically, quadruple from here just to even get back to like the reminiscence of not being completely, wrecked. So I don't see any reason that we should just all of a sudden get excited about ARKK. People are like, it's already down 75%. It's in deep value area. Well, it's going to go deeper value area. EDU, obviously been watching this one, had a nice little pop up, kind of cooling off here for a little bit. Do expect a further move to the upside. It is possible, though, we're starting to see a little bit of exhaustion. I would expect one more big push up here, reach that 26 level, and then basically this should just completely let go, come back down to maybe like 17 or so. If that area holds, we'll probably load up from there, but looking to take profits on this one. As again, I see a reaction rally, a reflex rally in China as they've just been getting wrecked, but is all of a sudden everything just going to turn around and be gravy? No, I don't think so. NEO, again, same thing, pushing up here, expect a retest somewhere around like 25 to 27, at which point in time I do expect further downside. NVIDIA, getting nasty, obviously recently put in a new cycle low, do expect this one to go lower. We're already getting in deep. This was our this was the Rona dump right here. This was the oh no, wait. Yeah, okay. So we still have a ways to go before this thing looks like it's even close to tired. I mean, this is this low right here, which basically looks like a 5-wave structure starting from March of 2021. That's our green fib level right here. And we have basically come down almost to 786 already. And then that's the macro 382 going all the way back to our 2018 December low right here. So that's the multicolored fibs we see, and we already took out the 236, and when we came back we retested the 236 and then continued down. So we're already seeing some play from our macro multicolor fib right here, and it's also lining up pretty well with that internal fib as well. So which one is being more heavily respected? I would say right now the macro multicolored fib, and that puts us our 382 target essentially around like 139. Which I do expect to get hit. We almost made it already, so maybe it's a front run. I don't know. Apple again broke down below the 236, took out our key resistance level back from September 2020, and obviously looks like we're going to top out right here and then roll over and go lower. Target like 114. This thing has been holding up extremely well. Everybody's piled into this thing. So if we start rolling over and we start taking out this long-term consolidation pattern right here and putting people upside down back to like 2020, you'd be surprised how quickly people will let go of their aspirations on Apple, and terms like cash-like position, etc. All of a sudden evaporate. Bearish, obviously, expect further downside as I do. Google is next. Obviously came down here to some key levels. We talked about the potential for a run up leading up to the split and how that's very common. We obviously saw some, essentially like double bottoming pattern right here. Didn't quite make it to the 382, which was our target. Looks like we want to come back up here to that 2500 level. So we'll see what happens. Obviously expect that to act as resistance, but that would essentially just be a reversion to the mean retest of a 200 exponential and simple. Amazon breaking down from key levels, retesting the 618, acting as resistance for now. If it goes back above the 8 and 21, maybe we could flip that back over and then potentially get a retest all the way back to the 382, somewhere around like 136. Also would give us a retest of 200 exponential or simple. Still very bullish. Bearish. I don't expect any of these things to overperform by any means, but it is possible that one or two of them does. As obviously, if something starts moving to the upside, gain a little momentum in these shit markets, people are likely to just pile back in like the little lemmings they are, just in time for them to fall off the cliff. And I'm sure the whole time they'll be just saying, any minute the Fed's going to deploy the parachute. Oh, man. Microsoft is next. Obviously hit that target. Have a trade setup in play for a nice little 20% move back to the upside. Could easily underperform and tag the 236. Could easily overperform and make it all the way back up to 200 simple. The most important thing is, though, we have broken down from a key pattern. We're in the middle of our, basically measure move to the downside. It doesn't look like it wants to come all the way back up to that level, but it is, however, possible. We also saw some bullish divergence developing. So, obviously looking for favorable risk reward plays. But if we're going to counter trend trade, we need those to be at least 3-to-1 risk reward ratio, as where if we were trading with the trend, 2-to-1 is viable. That being said, let's jump into our cryptos, and then we got a bunch of requests to take a look at as well. Doing good on time. All right, so Bitcoin futures chart. Obviously, what are we seeing here? Continue just meltdown. We are literally seeing this gap down right here and then move back up was a new lower low. So days without a new lower low in crypto, 0. Reset the counter because crypto is still trash. That being said, we are putting in some bullish divergence from this last low right here. Now, what could happen to invalidate this bullish divergence? Well, we just go lower and this flips back over and we go lower and there's no bullish divergence. Now, if we start to roll back up here, we see, another day or two of green histograms. Keep in mind, this first green histogram is literally 3 hours old. So anything could happen in the next 3 days. We do not need to put in bullish divergence. If we do, though, we're going to trust it because obviously when we've seen some of this bullish divergence play out in the past, we've done extremely well on some quick little scalp trades. So as always, we're looking to, extract money from the market and then get the hell out of the way and let the freight train continue running over all of the suckers and plebs. But I mean, at this point in time, our Bitcoin, targets have been playing out beautifully. So I don't see any reason to readjust those targets, but we've been waiting for the tag of the 382. We're here at the 382. We're slightly below it on the futures chart. If we reclaim those levels, we're going to start looking for that scalp trade back up to like that 28,000, possibly as high as 32,000 level. Do I think it's going to happen? I'm not ambitious right now because honestly, things look like trash. But it is possible. And again, this is my exact point. We saw literally that tiny little move to the downside just erased that green histogram. So until this closes on a daily, until we get a couple days worth of green histograms, I'm not going to get excited on this. Again, new lower low was put in today. So, I mean, you can't get bullish on that. There's no signs of bullishness. We can't even make them up. We can't even pretend. All right, and then looking at our Bitcoin Bitstamp spot chart, obviously going to look a little bit different because, we didn't see that same dump over the weekend on the futures chart. We see that only on the spot market chart. So here we're not technically putting in a new low. We would have to come back down to like the 18,879 level. Here we see multiple green histograms here. We see that same bullish divergence. So the real question is, well, spot market is trying to tell us that things look okay and there's potential, futures market not telling us the same. Well, we asked for it, right? We got all this institutional money in the crypto space. We got all these, ETFs in Canada and other countries, and we've got all these, fake ETF bullshit companies like MicroStrategy or BitO or all these like other garbage ways to play Bitcoin. And now we have a new short Bitcoin. I mean, what's going to happen right here? I mean, realistically, who do you trust? Do you trust the spot market? All the crypto cult members, the regular people, or do you trust the market makers, the whales, the institutional investors? I mean, that's up to you. I would say I would rather have both charts either agree bullish or bearish. But if they're both sending us mixed signals and we're clearly in a bear market, I'm not going to all of a sudden be like, oh, well, there's this one thing that looks bullish and I'm just going to trust that because that's what I want. No, hell no. Now, that being said, it does look on the spot market like we're about to get the stochastic cross back to the upside. Could it roll back over and go lower? Sure, it could. Could it, get the hard buy signal, leave the bearish control zone, and start looking okay? It certainly could. It certainly could. What has to happen in order for us to get bullish on this chart? We have to get back above the 8. We have to get back above the 21. We'd like to see the 821 cross back to the upside, and then possibly we can start looking at those 28, 30,000, or possibly a reversion to the mean retest of a 200 exponential and simple up as high as 37,000. What probability chance do I give that right now? Well, 0 if we don't do some of those things first, because it's impossible to get back up to these targets if we don't start closing back above the 8, and we definitely can't close back above the 8 if we don't get above, or I'm sorry, we can't get above the 21 if we don't close above the 8, and we definitely can't retest the 200 if we don't do all that shit. So that being said, I don't see anything bullish on this chart right now to get excited about. Obviously, that weekly close is just disgusting. We have not only lost the 200 exponential, we've lost the slope on it as well. We've not only lost the 200 simple, but the slope is basically flat right now. So all we have to do is not get back above 22,000 and the slope flips bearish. And then all of a sudden, we see something happening on the Bitcoin long-term chart that has literally never happened ever in existence. Just like when we said, what's going to happen when we break below 20,000 for the first time ever in existence, because we've never broken below the first time high. Well, now you hear all the other, crypto fake influencers, fake technical analysts talking about the same thing. They're all talking about how now all of a sudden it's bearish and we got to be careful here, but these are the best buying opportunities and blah, 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 blah. Is there a legitimate possibility that in Bitcoin's life, we have only ever been in a quantitative easing environment and just parabolically been easing and valuations have been going through the room through easy money? Yes, that's a fact. And now all of a sudden that's about to change. We're now going into a quantitative tightening environment like we've never seen before in existence. Definitely not in Bitcoin's existence. So is it a possibility we start seeing nasty stuff happen in the crypto space we've never seen happen before? Yeah, 100%. And I would say it's not only a possibility, it's a probability. And I would give it an over 50% chance that things are about to get nasty in the crypto market like no one has ever seen. And that being said, we've already hit the bottom of the 3. What we're expecting potentially is a retest of a 200 exponential and simple eventually for a push back up. And then again, that's going to put us around like the 27, 28 level. Does this have to be the bottom of our 3 and then the 4 pushes back up? No, it could easily come back lower. We could easily come down here and then the retest could be a pathetic retest like that. And then the 5 could be much lower. We don't know exactly what's going to happen. We just look at key levels and then we look for those to play out. This was obviously all in place prior to the move happening and it's played out perfectly. So I don't think we need to reevaluate what's happening right now and assume that all of a sudden we're going to be wrong when we've been right literally since, we've been right all the way up here. The last time we were legitimately wrong about what was taking place on crypto, realistically, the only time we've been wrong since, we called the top perfectly here. We called the breakdown from 6K. We called the bottom at 3K. We called the top here at like 12.5K. It ran to 14. We obviously got out of the way before the Rona dump. Called the bottom of the Rona dump. The last legitimate time we have been wrong about this market was actually a head and shoulders that played out right here, which actually we were right about. But what I was wrong about on the head and shoulders was I thought it was going to break back down and go lower, and we didn't. So that was the last time we've actually been legitimately wrong about what was going to take place on this. So, take it with a grain of salt. But, this has been playing out absolutely perfectly. Bitcoin is trading extremely technically. This is the best kind of chart we could ever have because it's trading beautifully. And everybody else is, wishing on rainbows and butterflies and looking for pots of gold and praying to the Easter bunny or, the crypto gods or whatever the hell it is. And we're over here using technicals that are working perfectly while they're looking at, Plan B's stock to flow ratio. Well, ask Plan B how their stock to flow ratio of their wallet's looking because obviously they've been wrong about everything and gotten people completely wrecked. That being said, we're going to look at a quick little short-term look right here and see what does Bitcoin have to do in order for us to even get moderately bullish on the 4-hour. Well, we lost the 821 cross back here and we're back below it again. So in order for us to get bullish on this, we need the 821 cross to happen again. So before we can even start to be bullish on a 4-hour, we need to reclaim the 821. We need to have that cross back to the upside. Then we can start looking at potentially being bullish on a daily time frame for that retest back up to the 8, maybe the retest back to the 21, and then we'll see how that develops over time. But me right now, no way. I don't see anything. This all looks like trash to me. Had a nice little scalp on Bitcoin, Ethereum, Matic, what was the other one? Chainlink, a couple of these other trash coins. But that being said, we're in, we're out. Obviously, we get our nut and we get the hell out of there. Because the trains are coming. Does it come today? Does it come tomorrow? I don't know. If it starts looking bullish again, we'll enter another scalp. But I'm not going to sit here and get scalped myself. Ethereum next. Obviously, Ethereum is hanging on to key levels. We bounced the 382. It is holding on for support for now. Now, unfortunately, we haven't seen any kind of bullish move on Ethereum since we reclaimed this level. So we have this potential setup in play for a 77% move back to the upside with a 7% stop loss. Massive reward, very little risk, a high percentage of 11 to 1. A high ratio of 11 to 1. So we can flip a coin, okay? We're not going to be right 50% of the time because we're trying to take a bullish trade in a bearish trend. So maybe we're right 33% of the time. But because the risk reward ratio is so high on this Ethereum trade, doesn't have to play out. But because it's so high, if we flip this coin 100 times and we're only right 33 times, but when we're right, we get $11 and when we're wrong, we lose $1. How does that work out in the end? Well, if we're right 33 times and we get $11 each time, we get 33 times 11. And if we're wrong 66 times out of that 100, and every time we lose $1, we lost 66, we gained, 300 and, 33? Yeah, so it's like 300 and let's just say 330 to be easy. So we have 330 versus 66. So if we take the 66 we lost and we subtract it from the 366 or 3 whatever it is, We take it and we figure it out. We still have a ton left over. So that means we're a winner, chicken dinner. That's the type of trade setup we're looking for if we're going to counter trend trade. Could it underperform? Sure. We want to definitely move our stop loss up as we go, lock in those gains along the way, as we do obviously expect underperformance in the crypto market, because it's trash, obviously. Bitcoin dominance obviously has busted out of our channel as expected, came back up. We got the perfect retest as expected. So what we're paying attention to now is, is Bitcoin going to hold this level and then continue to the upside? Or are we going to see alts all of a sudden start roaring back to the upside? Everybody's bullish. All the trash bag coins are good again. Who cares that, we just had a bunch of zeros happen? Who cares that we just had a bunch of, exchanges have to get bailed out by other exchanges? Who cares if it took Binance coming in and buying billions of dollars worth of Bitcoin to try to prop up the market? Who cares about any of that stuff, okay? None of that matters, right? Right. Well, you be the judge of that. But as far as I'm concerned, still just playing out as expected. Total market cap obviously broke down below that 200 simple level, back below 880 billion as expected, as predicted. And again, just starting to just melt back down here, barely hanging on to key support. Do we expect this to act as key support and get some kind of pushback up? I would expect the market cap to come back up and retest 1 trillion. Does it happen soon? Does it happen, after a little sideways action? I don't know, but I do expect it to retest 1 trillion at some point in time. So Matic obviously had a beautiful retest of our 200 exponential and simple on the weekly. That's why this big box is just floating there. Obviously, that was our target for entry point. And since then, it's had a beautiful, like over 50% move back to the upside. Obviously, bullish divergence. Talked about this quite a bit. It's still trash, obviously. Matic is one of the cryptos I like. So if I'm calling it trash, it's not because I'm mean or I don't like it. It's just because the chart looks like trash. So it looks like we want to come back up here to that 57 cents, retest to 236 before we continue to melt down. Avalanche, again, coming down here to our 618 fib retrace, kind of just hanging out here between the 0.5 and the 618. What's going to happen now is trying to build some momentum, trying to put in that bullish divergence and move back up to the upside. But obviously, nobody gives a shit. People don't know which crypto to put their money in right now because before they were just putting it everywhere. They were just spreading it out like you spread your seed when you're, in high school or college. All right. Now, all of a sudden, you have to try to pick. This is a crypto picker's market right now, and nobody knows what to pick because none of these cryptos are actually useful or do anything. And when I say none, I mean a very small percent. So that being said, if nobody knows where to put their money, it's a bunch of people just scrambling, looking for some kind of momentum. So that's what we're looking for is where's the momentum at? Solana obviously having some FUD take place or some fundamental garbage taking place. What's going to happen after this? I mean, look, if I was in Solana and what was taking place recently started taking place, you're talking about voting to confiscate whale wallets so they don't crash your project. I mean, that to me is a massive no-go. I would pull my money out of that immediately. If I give someone some money as an investment and then all of a sudden they take away someone else's investment because it's for the greater good of all the other people invested, I don't want to be involved in that. That's not what I want. This is supposed to be crypto where it's either decentralized or, an alternative source. It sounds to me like there's basically just a Solana government that basically just does whatever they want. So why do I want to speculate on something that's basically doing the exact same thing as the rest of the world is? If I'm going to speculate on crypto, if I'm an investor, believe in crypto, I want it to, work outside the system and do what the system doesn't already do. If I just want to trade or invest in another corrupt asset or asset class that's basically just has the same thing going on, I mean, what's the difference? You just have, these people as a government instead of like actual governments. No, thank you. I did have a nice little rally up off the bottom. We're talking about retest at 236. Does it happen? I mean, maybe. This is obviously a trash project. I don't know that I'll ever put another dollar in Solana again after what's been taking place. Constantly have the chain going down. Now they're talking about, confiscating wallets. Get out of here with that shit. That's garbage. That's the end of a project as far as I'm concerned. Basic attention token. Somebody asked me if there's any cryptos that I'm fundamentally bullish on. I think that was my boy Rod. To tell you the truth, basic attention token. I'm fundamentally bullish on basic attention token. You want to know why? Because I literally use Brave browser and it has an actual function. And if nobody ever told you that Brave browser had anything to do with crypto and you just used it as an alternative browser, you would literally be like, oh, this is great. This is cool. It's free. It has ad block. It pays me to do the shit I'm already going to do. Oh, that's cool. Yeah, that sounds all right. And it's crypto related? Wow, that's nuts because I didn't even know it. Because you don't need to know anything about crypto and you can use this and you can get paid to use it, and you can block ads. And, you know, even on YouTube, you literally turn on the ad blocker and it blocks all the YouTube ads. So what am I bullish on fundamentally? I'm bullish on basic attention token because it has a functioning product. It serves a purpose. It's a utility token. Now, does that mean it's going to appreciate in value more than other cryptos? No, because it actually does something. So it's probably going to be the worst crypto going into the future, because if it actually does something, you know, it's already doing its thing. So what is there to speculate on? If you have a trash project with fake promises that it'll never achieve, you know, obviously people are going to buy the snake oil because there's so much potential. But, you know, what ends up happening? Well, you just get poisoned and you die. So that being said, basic attention token is something I'm bullish on based on fundamentals. Now, technicals right now, we're at key support levels. You know, we hit this key support level here. It was a peak. You know, we obviously saw some playback here and here. That's our 618, you know, deepest bullish retrace that we typically would have. So is this the bottom for basic attention token? No, I don't think so at all. That being said, you know, somebody had asked me about that. So there you have it. Next we have Link, Chainlink. Obviously took a little scalp over the weekend, was looking for a little more performance out of it. It basically bounced a key level and then just sort of like sputtered out right here. What's going to happen? Does this eventually play out? We'll have to wait and see, obviously. There's definitely some potential play for it, but we really need to see Bitcoin do something. You know, Matic has been able to stay more bullish than most of the other cryptos on the recent move back up. So you know what? I'd rather just stick with the momentum. If the crypto cult is all going for one crypto together, I'm fully willing to jump on board for a minute and then jump off as soon as it's favorable for me. Algo is next. Obviously, Algo continuing to melt down. Very, very weak bounce off the bottom right here. Lost the 618, came back up, retesting it. Looks to me like a break below support, a retest as resistance, and then I do expect continuation eventually down to 20 cents. Lots of support back here to chop through, so it may take some time. XMR, Monero, so obviously came all the way back down to the channel as predicted. We have potential entry for a scalp position right here. 76% move back up to the top of the channel. We're at the bottom of the channel now. We're slightly below the 0.5. Do we go much lower from here? It's possible. If we do, cup and handle is ruled out. It's possible we come down to the 618 and the cup and handle still plays out. But once we go deeper than the 0.5 is when it starts getting sketchy, because you really do want to see it hold. Now, if we continue to operate inside this channel and we do come down to the 618, that's going to start looking favorable. You know, is there a scalp in the play right here? I mean, we're seeing a lot of these cryptos set up for a scalp move, but we really want to see some kind of momentum picking up before we start just jumping in on them. ADA, Cardinal beads. Obviously, we have the descending triangle. We're at the bottom of the range. Just been holding up better in the last few weeks than most cryptos have. The cult is strong with this one. Obviously, we have essentially like top triangle area. We don't know where it's going to come at. We don't know exactly what's going to happen. We basically have just this little wick right here, and then our little B wicks through here. So do we get back up as high as like 54 cents? Maybe. I think there's a lot of people trapped in this badly because everybody was staking. The cult was expecting this to go to $5. Topped out at $3, exactly where you said. Started to melt down, and all it has done is just literally bleed. So what do I expect it to do in the future? Well, eventually die, but before then, probably bleed some more. KNC, again, just melting down. Bottom of the channel, though, this is a key level. The previous times when we were down at the bottom of this channel, we saw massive, massive rallies to the upside. Now, does this trash project rally back to the upside another 400%? You know, does it ever rally back up to previous all-time highs? I don't know, 380%. But I know that the previous times when we're at this support levels right here, we did have a massive rally. Is it going to rally back to a new all-time high now? Probably not. Maybe it just comes back up, retests to 200 exponential. It's simple, though. You know, 66%, something like that, potential. You know, it's worth paying attention to. Don't want to get too excited about all of these bullish setups. As again, I fully expect crypto market to just continue melting down straight to zero on most of these projects. But, you know, what that's going to do is weed out a bunch of the trash, and then it's going to make the actual crypto space stronger. Because we need to kill some of these zombie cryptos. We need to kill some of these zombie companies. And, you know, well, I'll keep the other things that need to be killed or people to myself. But let's just say the world would be a better place without some of these scumbag people in charge right now. So that being said, if we root out some of these zombies and some of this trash and corruption and these fake projects and these, you know, horrible politicians and whatnot, I think the world will be better for it. So that being said, on to waves. Waves obviously having that double bottom off the 0.5. Nice little pushback up to the 382 as we were discussing. Again, we would expect this to act as resistance. So we had previously resistance. We had support right here. We broke through it once. We couldn't hold it as support. More likely than not, we come back up. We get rejected at that 382. It is possible we shoot all the way back up to 236. Much less likely in my opinion. But since this one just put in a recent high, this initial low followed by a lower high all the way back up here would not be unrealistic. So I don't think it's likely we get above this area right here, but there is definitely a possibility that if we see bullish continuation on some of these trash bag cryptos and stocks and whatnot, it is possible we see targets back up there as high as like $16, $17 from the $6 range now. So definitely a favorable trade setup, but not from this area. We really, because we're basically in between two fibs and we're counting on, an over-exaggerated move to the upside. So not exactly the best trade setup. I'd rather wait for a, lower low and then try to work that one. We do have some bullish divergence. We are seeing some momentum pick up right here. So, how much legs does this have on it? I don't know. You know better than me. I don't even know what it is. So, all right. So we got gold next. Gold obviously still looking weak. Cannot maintain above the 200 exponential or simple. We're hanging on for now, but you guys know how I feel about gold. If it's not going to do something bullish soon, it's going to look more and more bearish. Silver just continuing to melt down below support, back down at $21. Looks like trash. Gold silver ratio has broken back above the 200 exponential and simple. Gold strengthening compared to silver, telling us that one of two things is going to happen. Gold's going to go up and silver's going to go up less or down, or gold is going to go down and silver is going to go down much, much lower percentage wise. Therefore, if we're looking to put money into gold or silver right now, which we're really not, but if we are like a regular investment or a regular contribution, we want to be contributing or investing in gold over silver. But right now, neither one of them looks particularly great, technically. But, fundamentally, you could argue, well, probably the best time ever to have some physical gold. ACB, so obviously down here still at that 129 level, complete meltdown, no real support or anything right here. So I am starting to slowly but surely build positions in these. But the truth is, if we start having 25, 50, 100% moves back to the upside, I'm going to be taking part of it back off the table and then waiting to see that we start putting in some higher lows. Because until we start putting in higher lows, there's no chance of a bullish trend beginning on this. So all we're doing is putting in lower lows and lower highs. So until that changes, I'm not going to get excited about this, but it doesn't mean that I don't think at $1.30 that this is a great buy. Same thing with Tilray. Tilray actually has a little bit of support left, hanging on for dear life. I would absolutely love to see Tilray flush down and go below 250 and have zero support left and just like some kind of bloody waterfall, because I would 100% look at that as a buying opportunity. I am probably the most bullish on Tilray of all these garbage pot stocks. Hexo. Again, with everything going on with Hexo right now, a little sketchy. I don't know exactly what's taking place, but there's definitely some possibility or talks of, either a merger acquisition, potential bankruptcy type scenario, something like that. So again, with all these pot stocks, do I think they're going to zero? No. But am I treating all my investments in every one of these pot stocks as a potential or likely zero? 100% treating them as a zero. That just hasn't happened yet. Next, we have Canopy Growth Corporation, CGC. So we have a little bit more history on this one. I did a example in the group of a essentially like Adam and Eve pattern playing out, and I actually used this Adam, that Eve, and then the breakdown of support, and then that actually forms a macro Eve and then Adam in blue, and now here we have lost that support level. So now we're seeing like a macro version of the little pattern that we saw here, topping pattern, turn into what amounts to a gigantic Adam and Eve pattern. And then, been talking about it since like 1060. We expected a breakdown from this level. And when we did, we expected capitulation back to 1.618 of that internal retracement from the low here to the high right here. We're almost at that 1.618 level, just under $3. But realistically, wouldn't surprise me to see us back down at 786 or even pull, a cannabis play and just go to a new low that we've never seen before. So literally everyone that's ever bought this becomes a loser. And that's even better for us because, we want people to capitulate completely on these positions because the potential upside on these, is exponential. And that's what we're looking for. If we're going to trade against a trend, we want either a ridiculous risk reward ratio or exponential gain possibility. We're not doing, 2-to-1 risk reward ratio trades, hoping to double our money on. No, no, thank you. Got to be much, much better than that. And it's because we have to offset the risk. So this is extremely risky. It's literally just putting in lower highs, lower lows. So in order to offset the risk of this thing just going to zero, we need exponential reward to the upside, which is what they offer, which is why I'm so bullish on them long term. Right now, though, all going to zero. Uranium, URA. Okay, so we almost hit our 382 target. Obviously, been patiently waiting. Everybody else was talking about how these are going to new highs. Obviously, continuing to melt down a high, a low, a lower high, a lower low now. And what do we expect? Well, if we just put in the lowest low we put in, on this move to the upside, and now we're seeing that 1, 2, the 3, 4, the 5, and now we're not only going to retrace initially the 5, which we already did almost 100%. Now we're looking at the macro from the low down here at $7 all the way to the high right here at $30, and now we've already taken out 236. We have confirmed into a bear market by retesting the 200 exponential and simple and rolling over bearish. So next target to downside 382. We're almost there. Are we going to take this as a buying opportunity? Are we going to wait for it to go lower? Well, we're going to start paying attention to what's taking place here. But if this is only just beginning and we see energy continuing to go down, and all of a sudden we see, basically a shift coming out of these, everybody's bullish on uranium right now. All of a sudden, everyone hated uranium for decades, and now everybody's bullish on it? Yeah, okay, I believe you. No, thank you. That's why we're taking, obviously we closed out the majority of our position off of that triple bearish divergence that we're seeing take place. And we hit our macro target to the upside, actually slightly overshot it. So at this point in time, I'm not looking to load back up on uranium stocks anytime soon. Now, arguably, you could say, well, who cares? We sold up here, at almost $30, and now we're at $18. So we could buy twice as much back for the same price. If you had $100 and you sold up there, and now, it's $18, you literally could buy twice as much with that same $100. So it's the equivalence of doubling, your by taking profits right here and then rebuying here, basically had a 100% move. But the problem is that this could just be the beginning, and we could actually melt down closer to like $13 or $14 or something like that, in which case we really wanted to wait, or at least take our time entering back into the position. So we are at low levels right here. We're not seeing any bearish divergence or anything like that, but I do see further continuation in the cards, as we've only just confirmed into the bear market. UEC, again, below the 200 exponential and simple, starting to roll over. It's holding up better than most for now. We do still have much lower targets. And when we have one outlier that looks good like this, and then everything else in the space looks a little weaker, I trust the majority, not the minority, not the one that's strong or the one that's weak. I'm looking for the overall, sentiment or price action of the space. So here is UROY. Obviously, we talked about how this one was an underperformer. Had a beautiful little scalp setup for a nice little 30% move back up. Took profits at the 200 exponential. Obviously, sold off violently from then. And now here we are back down at the lows again. Seeing potential, is it possible this rolls back over and we find support again? I don't think so. There's no reason we come down to the 382. We retest all the way back up to 236. We come down to the 382 again, and then we come back up. No, I don't think so. We're probably getting ready to fall off the cliff on this one. Next target is going to be to the downside, the 0.5 at about $1.82. So, and obviously, again, took profits back in this range at over 550. So, already could buy back in with twice the size of the position we had with the same amount of money. Don't want to get greedy with it. Obviously, could go lower, could just roll around by here. I don't see any signs of bottoming. Confirming into a bear market right now. Again, threatening those lows, consolidating at those lows. Looks like we're going much lower. Obviously, still have our target in play for the 382 or the 0.5 or even our macro fib here at like $3. Again, very bullish on this, but it sure looks to me like we just put in essentially, sorry, this is an old chart. Obviously, we had these targets in here quite a while ago. So if we just take our 0.5 and we say, well, that was actually probably the top right there. And, now we're just putting in lower highs. So again, we can start fibbing for that entire 5-wave structure, slightly lower. Sorry, this was an anticipatory target that slightly did not get hit. So again, below the 236. So next target's going to be our 382. And that's our macro 2 retracement, assuming that we just had, sorry, these shouldn't be the same color. That's my fault. So this is basically our macro target, assuming that, we basically had a 5-wave structure. It's going to now retrace. And then once it retraces, we're going to have a, 382 bullish retrace, or maybe we have a, 0.5 average retrace. But regardless, whether we get that 382 retrace, whether we come down to a 0.5 retrace, we're looking to load back up around those areas. As on the macro, those are going to be key supports at like 200 exponential and simple moving averages. Key areas of resistance previously that on a retest should act as support. Still very, very bullish on uranium long term. Right now, not so much. Okay, so we talked about Altria, and I told you guys I was looking at a potential trade setup. Obviously, we did not pull the trigger on that. We have confirmed back in the bear market. And you know what I said, too, that had me wondering about Altria and thinking this level was going to fail, this trade setup? Potentially. Obviously, did not take the trade, but we were talking about this was potentially going to fail. I said, I'm hearing an awful lot of people talk about Altria, and that tells me that, again, everybody's trying to get on the wrong side of the trade right when it's already happening. And look at this thing has literally just melted down. We lost that key ascending support. We lost our key fib level, and we just took out that previous low right here. So now we have a high that has taken out that previous low. So eventually we expect to bounce back up. But this thing is literally just melting down. I mean, this last daily candle, look at this. Another almost 10% move on the day. And how did we know not to get into that? Well, we couldn't reclaim the level right here. We confirmed back bearish. We could not reclaim that ascending support right there. And that tells me if we can't hold this support right here, we're going much lower. As soon as we threaten that previous low right here and we take that out, well, I mean, that just tells me eventually we'll get a bounce and then we're coming back down low. So now all of a sudden, Altria looks even more juicy down here at like 38, maybe 36. Who knows, even lower. But when we look at this on the monthly chart, now we're starting to enter into the danger zone. Because this, to me, now looks completely different than it looked before. Before, it looked like a retest of a 200 exponential on simple with potential to go back to new all-time highs. Once we bounce the 200 exponential on simple and we come down like this and then immediately come and retest it, it looks okay still. But now we're retesting on the monthly, the 200 exponential on simple, and we see the 200 simple getting ready to cross above the 200 exponential. So what does that tell me? It tells me there's still possibility for upside potential on this long term. But right now, I mean, we're in the danger zone because we just retested the 200 exponential and simple. We got a nice little rejection away from it. And now here we are right back at it again. So that tells me the market is not confident on what's going to happen with Altria going into the future. And the fact that all the plebs FOMO'd into this trade and got all excited and then it completely melted down, it tells me that somebody's probably painting the tape so they could dump all over the plebs' faces. And I'm not sure if you're into that stuff, but I'm not letting anybody dump on my face. KHC, Kraft Heinz Company. So obviously the same exact situation. We have an ascending support right here. We could not hold that support. We bounce back up retest. We bounce back up retest. And again, we cannot maintain as long as we're below the 200 exponential, as long as we're below this ascending support. I have no interest in this potential trade setup right here. And again, if we start taking out previous lows, I fully expect us to come all the way back down to like $30. And that's where we'll get a much better entry from. But that does kind of destroy the bull case long term on this chart. It doesn't mean we don't get a nice scalp out of it, but all of a sudden it looks more like a scalp and less like an investment. CBT, Cabot. So Cabot, again, losing the 200 exponential or simple. What's really happening right here? We're seeing all the charts that held up now starting to give up. I mean, this one never, well, I take it back. I shouldn't say never. We got below 200 exponential and simple right here in September. We were able to reclaim it and move up higher, but now here we are threatening it again. This is not what a strong trend to the upside looks like. This is a trend that's just barely kind of like staying alive. A strong trend to the upside is like the monthly on the Dow, where we don't even come close to the 200 exponential or simple. This, we're constantly retesting it. And each retest is followed by a deeper retrace back to it. So I don't love how this stuff looks here. Now, is this going to do well in recession scenario? Yeah, I think it is. Could we get a nice entry about 10% lower and then go up from there? Sure. But, we got to be patient with these things, especially when we're counter trend trading. We need everything to line up perfectly. Not because we have to win every time or be right every time, but especially if we're taking counter trend trades, we need to literally look for perfect setups that have everything looking good. I mean, I want them to look technical. I want momentum in my favor. I want bullish divergence. I want literally everything in my favor for these counter trend trades. I'm not just taking like random ones because I'm like, well, there could be something there. No way. I'm looking for perfect trades. You know what? And we look at enough assets, I promise you, we're going to find perfect trades, and they're never going to stop because there's always a better trade out there. There's always a nice trade. HUSA is next, Houston American Energy. So we're still seeing that continuation back down. The most important thing is that we just hold this support level. That's the most important thing we're paying attention to. So when we come back down here to like 331 is when we're going to really start paying attention to this. In the meantime, it looks like it's headed there. 821 looks ready to cross back to the downside. So we're just waiting on that one. ENI is next. So we have hit the 236. We have confirmed now that we can officially fib from the low to the high. We have hit the initial level. We do expect some sort of bounce back up, maybe the 200 exponential and simple around like 1283, something like that. But I do expect to go lower. Next target would be the 382. We rarely ever have a fib from the low to the high, come down to the 236, and then go higher. We almost always go deeper than the 236. I mean, it's literally like a 90% chance once you hit the 236 that you at least retest the 382. So, and then once you hit the 382, there's a 50% chance you retest the 0.5. And then once you hit the 0.5, there's 33% chance we retest the 618, et cetera, et cetera, et cetera. So as we get deeper, the probability of going deeper, gets less, but, the trade setups get better. So the deeper it goes, the higher probability we have of a good entry. The problem is, if you just say, well, I'll just wait until we double bottom back down here at $5, maybe we don't go that low, and then you miss the trade. So that's why it's important to pay attention to these key levels and look for what looks like at least temporary bottoming signs. It does look like this is headed lower, though, at least for now. NEM is next, Newmont Corporation. So we obviously have been paying attention to this macro triple bearish divergence on this one on the monthly. So we have 3 higher peaks, and then we came back down. We basically have, I thought I put in something like this, maybe not. We basically have, this ascending wedge, and here we are back down at support. So previous times when we hit the support level, we bounce back up and put in another drive of divergence. Is it going to happen this time? But we don't know. If we were going to enter into a trade right here, just like we talked about before, we want to see this area hold, and then we could potentially get a retest. The more times we start retesting the top of this range, more likely we are to break through and continue to the upside. Looks okay for now. Looks like there's probably a nice trade setup right here, right up until there's not. I don't like that we're below the 200 simple, 200 exponential right now. We are still above the 200 simple, but essentially what we're looking for is we need to see this area down here hold. And then once this area holds, we can start looking at, potential upside to take us back up to at least retest like that $78 range. And again, we get something like a 5% stop loss with a 24% upside potential, almost a 5-to-1 risk reward ratio. But just because the trade setup's nice doesn't mean we just jump into it. We want to see this consolidate. We want to see some exhaustion on the selling, and then we can start to round up and take these trades right here. But again, looking for a perfect setup. Everything has to look just the way we want it, or we're not taking these trade setups. Obviously, none of this financial advice. I'm not your financial advisor. The markets are extremely volatile. Please do your own research and trade responsibly. Next, we have Vail, SA. So we took a look at this one on our last stream right here. Again, we have another one of these just ascending support lines looking good, but coming back down here to retest those key levels, coming back down to retest our key horizontals as well. So we want to see this area hold. If this area doesn't hold right down here, which would be our buy zone, if we get down to it and it holds, that's potential for a scalp back to the upside. If we don't see that hold, we look for it to come back down lower fib wise, but the only problem is we have lost this trend to the upside. So what we want to see is we want to see trends accelerating to the upside. We want to see a nice slope line like this, and then we want to see, this is how we know a trend is getting stronger. The slope is increasing. That's what we want to see. So we want to see this is good. We got a couple bounces right there, and then we start to accelerate, and then it's like, oh, now this is our support, and then we just start going parabolic. That's what we want to see. That's a strengthening trend to the upside. That's buying into momentum. That's not what we're seeing. Once we broke down from here and retested this and then put in a lower high, now all of a sudden this trend looks like, wait a minute, this might be getting ready to roll back over and fall out of bed. And that's exactly what I think this is about to do. MOS is next, Mosaic Company. So we're back down at the entry point we're paying attention to. Again, if 200 exponential and simple hold right here, we're looking for a scalp back to the internal 618 from the top right here to our what could be the bottom. We don't know if this is going to be the bottom yet. As a matter of fact, we haven't even hit our target to the downside yet. But if we do, we would expect at least a reaction rally to the 0.5, if not the 618, for potential 30% upside, 8.5% downside. 3.4 to 1 risk reward ratio, not great. Still in the bearish control zone. If we leave the bearish control zone, get a hard buy signal, a couple green histograms in a row, bouncing 200 exponential and simple, this starts looking juicy. And to tell you the truth, that's probably what happens right there. But we don't want to jump the gun either, because the market starts just melting down. the trade setups can go from looking great to, yeah, right. DRV, Direxion Daily Real Estate Bear 3X share. So basically, we got that initial push up to 236, looking tired after that. We want to see it come back down and then potentially get an entry off of the 200 exponential or simple. And then at that point in time, we can look for that potential move up. But we know you're basically, banking on or hoping for or betting on a quick little rip to the upside before this thing just continues to melt down. So that being said, that push back up to the 382 is 117% from the entry point, slightly below where we're at right now. Does it play out? Probably not. Probably not. As the majority of times, we do not see an aggressive spike to the upside like that. We basically retest 200 exponential and simple and then melt down. Now, it doesn't mean that we don't get one of these. Maybe we even get a bigger one. Maybe we come up to 618, 207. But again, I doubt it. But there is potential right here. So let's see where it comes back down to and hold support. And then we can really look at that one. So next we have Palantir. I have not brought this one up on the channel for some time. So since obviously we had a bunch of, obviously called this perfectly again. Everybody else was bullish on Palantir. They're buying gold. They have government contracts. Palantir is the future. Oh my God, what's happening? But what about the gold? What about the future? What about the government contracts? And it's gone. So what is happening right now? It's completely melting down. No one who has ever bought Palantir, with the exception of, in the last couple of weeks, has ever made money in the stock because it has literally melted down. Unless you sold out somewhere on the way up, you're, obviously, you guys have seen it a million times. It's just a giant red block of loserness. So that being said, obviously, after we melted down, we came back down, completely took out the low. So now we can look at fib extensions to the downside. So we have the 1.236 right here. So let's go ahead and extend that out. So entire life of Palantir, it basically has come back down. It sold off everything and then another 23.6%. Now we're back up here retesting the all-time, the initial low right here. So we're retesting that price. And what are we really doing? Well, we're probably just coming up here to, we technically already filled the gap. So there's not even a gap fill anymore. It's trying to move back to the upside. Where could it go? Well, next target would be the 886 internally. It's definitely possible we go there. Does it have to? No, I don't know what's going to happen on this. But realistically, if we go from the high and let's say maybe this is the low now, let's look at it. So in order to, call this a low, a tradable low based on our Fibonacci, we need a retest of $10.11. So if it goes up to $10.11, tags that, then it looks like, okay, we have the internal retracement 236, probably come back down again, put in another higher low, and then we can start looking at 382 as our target for like $13.50. So is this going to be a nice setup? Probably not. It's okay, but realistically, that's what we need to start seeing happen. We need to start putting in higher highs and higher lows. We need to basically, start pushing up here, come back down, retest, push up again. But until we get up to the 236, which could easily fail to happen, but until we confirm up above the 236, can't get bullish on this thing because we haven't actually put in a tradable potential bottom based on Fibonacci's yet. Sam, Boston Beer Company. So basically, again, just completely melting down. We have literally given back the entire rally from March of 2020, a 100%, road trip all the way up, all the way back down, round trip the entire thing, straight up trash, obviously. Accelerating to the downside. Does it look like we're going to find support anytime soon? I don't think so. I don't see any reason. Temporarily, sure, we probably do because we have, a shorter term low right there. But when we look at this on the macro, what are we really looking at? We're probably looking at that 2017 low as our actual low. And then what's going on from now? Well, we retraced back down about 61.8% of the way, and we tagged our monthly 200 exponential. So we do expect some sort of temporary support. Previous high right here, previous low right here, 618 retrace of the entire market move up here from 2017, I said. And then obviously with 786 slightly lower, it's possible we get there. This thing is like flatlined at the bottom of the range. So does the selling continue? Long term, probably, but short term, it looks probable that we do get a bounce somewhere around this level. Now, where does the bounce go to? Well, we don't know. This thing straight up melted down and then retested the 382 as resistance and then just melted down again. So maybe back to the 0.5 would be our next target to the upside, about 407. I mean, it's a 33% move to the upside, so it's not bad, but more likely than not, we continue to melt down. There's nothing showing us, we literally have a year of bearish histograms, hard sell signal, and just a meltdown to the bearish control zone. I mean, this just looks wrecked right now. I'm not sure what they're doing, that their stock looks so much worse than everybody else, but we're about to confirm into, well, we have technically already confirmed into a weekly bear market. Last time we did that was 2016. So, and that time we didn't have a blow off top like this. So when you have a blow off top like this and it starts melting down, expect it to overshoot to the downside. It obviously overshot to the upside. This is, this is a full on melt up. So if you melt up, expect it to melt down. If you overshoot to the upside, expect it to undershoot to the downside. So could this go much, much lower? It really could. It really could. I wouldn't be surprised to see this in like the 230 range, but we are at some key support levels. We do have some weekly bullish divergence. There's definitely some confluence at this level for a potential move back to the upside. But again, we're not seeing any actual signs of it yet. Now, could you just say, well, there's enough confluence at this level that I'm just going to pick the bottom and say the bottom is in, I'm buying? Sure, as long as you have a favorable risk-reward ratio, as long as you have a clear definable target to the upside and invalidation / stop loss to the downside, that's completely fine. But I prefer to see signals from the market telling me that we're putting in a bottom. I mean, this thing literally just put in a new low. In the last 5 days, it's hung out at the lows, but it literally gapped down to the low again, slightly lower even, and then had to push up in like a single daily candle. So that just tells me, well, we're going to put in a new low. We just haven't done it yet, because that's all we've been doing this whole entire time. Every single potential rally has gotten faded. So, and look, from when it melted down right here at 920, it gapped down to 720, and there was no pushback up to even try to close that gap. So what does that tell me? Everyone is trapped. There's so many people trapped right now. So many people trapped. So any attempt for this to run back to the upside is just going to get sold into, in my opinion. Bud is next. Anheuser-Busch. Did I pull up the right chart? InBev FA sponsored? Yeah, I don't know what that means. I'm pretty sure. Yeah, this is the right one. So yeah. All right, let's zoom out on this one and see what's really going on. I mean, I'm an OG, so I don't mind Bush, but, shaved is nice too. It's really just preference. All right, so let's take our macro high back here from 2016. Let's take our low right here, March 2020, complete meltdown, lowest low ever to print on this chart. Oh, that's nasty. Ooh, that is nasty. Bounced it all the way back up to the 618. We see clear interactions on the way down. Look at this. This is a technical beauty right here. Okay, we top out right here. We don't even know where our bottom's going to be at the time. And look at this. We bounce the 786 perfectly. Get back up to the 886. We come back down. We lose it. Retest it as resistance. We melt back down all the way to the 0.5. We come all the way back to 786. Fucking perfectly. Okay. And then we just straight up melt down after that. We stop at the 382. We try to hold up at the 236. We trade very technically back to the 618. I mean, this is beautiful. If you're trading a fib on this chart, you're doing nothing but making money. So now that we have lost to 382 again, what happens? We probably pick this back up at the 236. So about 45.75 is probably where we're headed next if we go to the downside, and that is going to be a potential entry for what amounts to just a higher low. Most important thing is we do not want to see this thing close a monthly below 43.91. Obviously, we would love for the 236 to hold that support. And regardless of if it holds long term, it's probably going to hold short term because how technically this is trading. On the monthly too, beautiful. But obviously, very, very bearish. I mean, this thing looks like complete trash. On the weekly, this thing has been completely melting down and in a bear market since 2018. So what does this tell you? I mean, this is probably the equivalence of, I don't want to say it's a dead company, but it's probably dead money until they figure out what the hell is going wrong. Because this is just melting down. Each of these retests off of the 0.5 was a retest of 200 exponential and simple, reversion of the mean, meltdown all the way to 0, reversion of the mean, lines up with the 618, meltdown to the 236, reversion of the mean, probably comes back up to the 0.5, maybe just to the 382 when we get there. Depends how long this takes, but it looks absolutely disgusting. Absolutely disgusting. Definitely would not want anything to do with this anytime soon. Now, if it hits our target, maybe we take a stab at it after we see it putting in, a macro higher low. But right now, I mean, it looks nasty. Absolutely nasty. This is trash. You would think they stopped making, beer or something, or Bush, whatever it is they make. What is it? Downstairs toupees, right? Is that what they make? Or no, I think it is beer. That's right. It's the beer. IGO limited. All right, let's zoom out here on that monthly. Take a look at what we got going on here. So recently just put in its highest high. So we have two key areas we could look at. We can look at the macro low right here, or we can look at the recent low right here. So obviously we respect that one because it's the most recent clear swing low. So that's what we're going to pay attention to. We are doing a bullish retrace potential from the top to bottom to the top. Now, what are we looking at? Well, if this comes back down to 236, that's going to confirm that fib is legitimate. Unfortunately, that same level is also the previous couple highs right here. So if we come down to that level and then we come back up and don't put in a higher high, it looks like we're probably going to roll back over and come down to the 382. Hard sell signal on the monthly, left the bullish control zone, multiple red histograms in a row. Are we calling a top on this one? Sure looks like it to me. Sure looks like it to me. So what do we got going on here? Well, the commodity space is topping. It's very, very clear that as long as we have inflation like this, more likely than not, short to medium term, commodities are topping, have topped, or are very near topping. And that's just demand destruction based on prices. So that being said, is the future good for this? Yes, probably. But right now, is it good? No, it probably has some serious downside potential after this massive run-up. And look at that. Look how beautifully, technically, this dirty little girl is trading. From our high right here in 2008 to our complete meltdown at the bottom of 2008, Fibonacci extension target hit 1.236 perfectly. If we find support right here and move back to the upside and don't see this thing lose that previous high as support, which is viable, it's definitely a possibility. If we don't see it melt down below that $9 level, next target to upside is going to be the 1.382. So, what are we looking at right here? Okay, we want this area absolutely needs to hold. If it comes down here, it's potential it's already topped out. However, if it does hold, we could potentially have a nice entry right here for a move up to our new high, which would be the 1.382, closer to 20 bucks. So again, we're at 10 now, looking at a target of about 8, somewhere around 825, 850, with the target after that of 20 bucks. So if we can get it down here at 8 and it starts rounding back up and looking good, we're looking for 20. But if we come back down here and it doesn't look good, or we come back up and put in a lower high after that, we want to get the hell out of the way, because more realistically, we're probably going to go and get nasty down at 550. Doesn't mean we don't eventually get up here. Realistically, our macro upside target is 33.74 on this. So if you got a long enough time frame and, balls of steel, and you're not afraid of drawdowns, there might be potential to just say, F it, I'll just get in now. But I don't trade like that. I'm looking for, I'm too cheap. I'm looking for that perfect entry, and I'm looking for those juicy targets to upside. So as far as I'm concerned on this one, probably is coming down lower. Looks like it has at least short-term topped, and that lines up with basically my theory on energy and commodities. Essentially, trade got too crowded. Now we're busting nuts on everybody, and we're getting the hell out of there before, we find out who got pregnant. So SQM, not even to say that name right there, but essentially looking at something very, very similar. Basically, it's like the exact same chart here, obviously. So if we take our, internal fib extension right here, we have hit the 1.236 perfectly. So again, exact same chart. And then again, if we look at the bottom right here and we take it to our, what is for now the top, we don't know for sure if it's a macro top. Again, it's going to be the retest of that exact same level. So it's literally the exact same chart. Obviously, they're both in the same space, so it makes sense. That being said, again, it's the same exact thing. Do we find support right here when we come down to 236, or do we violate that level? We don't know yet, but when we come down here, we're going to look at potential entry, and then realistically, what would be our next target to the upside? Well, we already hit the 1.236, so 1.382, 1.5, and then macro target of the 1.618 long-term is probably what we're looking for. Somewhere around like 190 would be that long-term target, which again, we're at 90 now. If we get down here to 70, now we're talking about, basically a 3x. So definitely some potential here. This one is not showing. Well, this one's giving us mixed signals, okay? So here we put in bearish divergence from this peak to this peak. We got the hard sell signal. The knife came up higher, but what happened to the price action? Well, it shot up to the upside without even confirming the stochastic cross. Stochastic cross back to the upside. So that being said, we're now looking at a double top on the knife, and this thing is looking tired, but the histograms are still all green, momentum in its favor. So this one's kind of sending us a little bit of mixed signals. But overall, I would trust, what we're really seeing right now, which is some weakness up here. So we'll see how this next, basically like week or so plays out. I suspect this probably closes lower or around where it's at now, and then we see follow through like next month, and that's where we kind of get that retest. Possibly even come back up for a lower high, and then we get the retest. Maybe we develop some clear divergence, but we pretty much, we have divergence from this peak here in 2017 to this peak here, assuming we start topping out, which the stochastics are telling us we already did. So while the TJD TDMACD is designed to give less false signals and has a little bit more momentum, weighting to it, the stochastics are probably giving us the more honest picture right now, to tell you the truth. And, we know previously, whenever we're in the bullish control zone, hard sell, massive sell-off afterwards, bullish control zone, hard sell, massive sell-off afterwards, higher low though, so bullish control zone, hard sell signal, probably coming back down for a dirty little retrace. Now, that being said, all we care about is when we come down here, do we put in a higher low? Because now, look what we have. We have a low, we have a high, we have a higher low, we have a higher high. So what do we want now? Well, we really want to get down here. This is the best spot. If we come all the way back down to 200 exponential and simple, get a nice little juicy retrace over like the next, maybe like year or so, and then we end up back down here in between the 0.5 and the 618, that's a beautiful entry. And that's really what we're looking for. And that, again, lines up with probably, slowing demand for precious minerals or, all this various stuff, the producers, etc. We come down here, we find some support, another higher low, and then again, we continue to the upside. So that's what I'm looking at right now. And it seems very, very probable. So thank you for everybody that put in requests. If you have any further questions, always glad to answer those. Appreciate you guys interacting. Going to jump over and chat for a couple minutes, and then we will wrap it up when we're all done. So rip through some assets today. Hopefully I didn't talk too fast for you guys. Might have to go down from that 1.5 speed to the 1.25 speed. But we did come in about an hour and 41 minutes, so very nice. All right, so we got KLL.C, or maybe K_I_C. Good day, sir. How likely is it for the crypto market to go down further than 30% from where it is now? Thank you. Go down another 30% from where it is now? I would say it's extremely, extremely likely that we see another 30% down from where we're at right now. Matter of fact, what is that? That's $6,000. That's 14K. Matter of fact, that's one of my macro targets is $14,000. So do I think we go to 14K? Yes. After 20K, 14K is my next target. We already hit 17K. So likelihood of going down, I would say very, very high likelihood of going down. Until we see something otherwise, I fully expect crypto to continue putting in new lower lows. Does it put in a higher high or a higher low first? Sure, maybe. Does it put in a lower high first? Sure, maybe. And that's our target to the upside. So, but we're looking for bullish divergence start to develop, rounding bottom. We need at least the 4 hour to start looking bullish. Then we can start looking at the daily. Then we can start turning these scalps into like more swing / midterm positions. But yeah, I very much think crypto's going much lower. Matter of fact, man, not to be like overly bearish, but I think there's a legitimate possibility that crypto is now going into its first long-term bear cycle after basically an entire life cycle to the upside. At least Bitcoin anyway. Parag, what's up, brother? Good to see you. Hello to you as well, my friend. Kuzakong says, invest these balls, invest balls. I'm assuming that you are a retarded human being and you're just having some sort of like outburst or something like that. So continue to put dumbass messages, and obviously you'll be banned forever. And I will come to your house and put my balls in your mouth as well, per your request. Peter G says, you like to spam? Obviously he does, man. He's requesting balls directly in his mouth. If I'm in the area, I will oblige, but, just out of like respect for the community. Eli says, Karkov, good to see you, brother. Altria puked today after already gushing. Some news of them being told by the feds to pull jewels from retail. Yeah, I heard about that, man. I mean, I don't know how that all works out. I mean, is that just FUD? Was it already getting ready to melt down and this was just the catalyst for it? I imagine it was something in there. I mean, realistically, the chart was already telling us when we lost that other key level, something nasty was happening. So what does that mean? Well, if you worked at Altria, and let's just assume that, there may be possibly some corruption in the world today, which, I mean, I don't want to presume, but let's just be real. Maybe there's some insider trading or some corruption or something going on. It's possible that initial move down was the front run of the insiders, and then realistically the continuation we saw today was basically just like everybody else. But if we look at the chart, it already looked like it was about to give us that bloody waterfall when it lost that ascending support, the 200 exponential and simple. So no surprise there. Once again, the charts tell us in advance of the news. So, we didn't even need to know about the jewel. We looked at the chart already and we knew it was getting ready to melt down. So yeah, hell yeah. But I mean, it doesn't mean I don't like dislike news or anything like that. It's always interesting to hear like what happened or what like the catalyst is or whatever. But I mean, I would say 95% of the time, the chart is already telling you something big's going to happen before it actually does. So honkiness. What's up, my dude? Good to see you, brother. Eli with the thumbs up. Jay Hoff says good stuff. Hell yeah, man. Appreciate all you guys showing up today. Hopefully everybody enjoyed the stream. Hopefully I didn't talk too fast. Going to honestly really start putting out those static videos. Going to try to keep them around 15 minutes to 30 minutes max and just run down exactly how I draw the charts, how I do specific technical analysis, how I'm using what to determine the trend, just so people can have like these quick little videos, essentially like focusing on main assets in a space. So for instance, I'll look at, say, Bitcoin. I'll look at, say, the Dow Jones, and I'll show you exactly how I draw my charts step by step, and then you can replicate the same thing. I'll tell you how I'm using the moving averages, what I'm looking at for momentum, what I'm looking at long-term, short-term, the whole deal. But just a basically like compacted 15 to 30 minute video on like important assets in the space. And then after we take care of like a few of the main indexes, cryptos, whatever, we'll take some requests or whatever, and I'll pop some out there. Or maybe I'll just do them on, popular stuff like Tesla or something like that. So, but yeah, look for those in the next like week or so. Just, it is what it is. They'll come eventually, but I stay fairly busy and, definitely get a little carried away with these streams sometimes. And, putting about 9 hours, 9 hours a week into this, plus a bunch of time into the group takes a lot of my time. So I figure it's only fair if I cut a little out one place and put some out the other place. I love doing 3 streams a week. I feel like it's the perfect amount to do. But at the same time, having some static videos with like longer term, analysis, if I put one out and then it's good for, a month, 2 months, 6 months, years into the future, that's something that's more useful. I think with the streams, even though we're doing them 3 days a week, and they're like up to date and we're running through a bunch of assets, I think that the perception, at least, of people watching them or potentially watching them is that they're going to expire. Like they're not as relevant over long term, even though we're typically doing daily, weekly, monthly technical analysis. I want to have something out there where people can look at it, and then we can look back at it in 6 months, a year, 5 years, 10 years, and we're like, oh shit, look, we just hit the 1.618 from our all-time high to, the retrace, etc. So that's what I'm going at with that one. All right, Calma Betty, appreciate you, man. I was kind of wondering what was up, dude. I saw your comment when you first showed up, and I didn't see the go-to message. So are you just good now? No more Bitcoin 10K, man? Are we just giving up? Not me, dude. Not me. Bitcoin 14K and then 10K. Probably lower. But yeah, we're going to go ahead and wrap it up there. Appreciate each and every one of you. Obviously, you guys are already subscribed. You already smashed up the like button, and most of you guys are group members. Appreciate each and every one of you and your support. We have the awesome community. And you know what? I mean, I can't imagine there's possibly another community out there that has literally done as well as we have, not only with our analysis, but with our trade setups, our calls, everything. So if there is one out there, let us know. But you know what? We've been killing it together. I can tell by not only the group members that have been, with me or together, us as a group for now, what goes on a couple of years, but even some of the newer group members that have recently joined, I can literally see you guys growing. The amount of people that are posting up in advanced trade setups and then seeing them play out, and not only just posting up random trade setups, but using actual technical analysis and methods, risk reward, all that stuff. I mean, I can tell 100% that the people improving are going to see exponential gains long term, because I can see the improvements. Sometimes you don't realize it when you're the one improving, but then when you look back and you say, hold up, now all of a sudden I'm building a case for assets based on technicals. I'm looking for internal retracement targets and, Fibonacci extension targets, momentum, risk reward, all that stuff. I mean, I absolutely love it. Seeing everybody grow together and the amount of synergy that we can have with each other is absolutely phenomenal. And I'm grateful every single day for each and every one of you guys. So everybody have a wonderful night. Going to go ahead and wrap it up there. Remember, none of this is financial advice. I'm not your financial advisor. Markets are extremely volatile. Please do your own research and trade responsibly. It is 9:51 Eastern Standard Time on Wednesday, 6/22/2022. I am Crypto Trend Trader, and I'm out of here. Make sure you tune in for our Friday wrap up at 11 a.m. Eastern Standard Time. And then, of course, we'll be looking at our Sunday market look ahead, 8 p.m. till probably about 10 p.m. Eastern Standard Time. And keep your eye out for some static videos, probably sometime in the next few days. I don't want to make any promises. So, but that's it. Everybody have a wonderful night. Make sure to protect your capital, protect that principal, and obviously lock in those games. So, this dude's banned. Kuza Kong. Do you want to be banned forever? Is that what you're going for here? Yeah, okay. It's official. All right, brother. Well, enjoy yourself. Have fun making a new account so you can show back up and get teabagged again. But that's a wrap for you, my dude. No spamming in this chat. Yeah, sorry about your luck. Bye, Felicia. Bye. All right, we're going to wrap it up there. Everybody have a wonderful evening. Crypto Trend Trader, and I'm out.